Let's bring in another voice today who thinks we're going to rally 300 points in the S&P 500 by the end of the year. That's right, I said it. Brian Belski, BMO, via Naples, Florida today. Look at him. He's tan. He's got a smile. He's usually bullish. I don't mean that as a negative. I'm not trying to disparage you. But are you really that bullish? We're going to do 8% or more between now and the end of the year, Belski?
Wapner, we are. Thank you so much for having us. We're humbled to be here. Thank you for that kind intro.
It's my pleasure.
You and I have known each other
as jazzed up as possible rather than, well, let's bring in Brian Belski at BMO Capital.
Okay. Listen, you and I have known each other for a long time. I was going back in my memory bank. I think it's been at least 15 years.
Wow.
And you'll remember.
Dating yourself.
You'll remember. I know. You'll remember back in 07, 08, I was probably one of the most bearish strategists on Wall Street. In fact, I was the very first strategist in the world to go to a sell on financials. And so we'll make the tough call when it's time to make the tough call. Now's not the time to make the tough call. And I think the biggest problem that we're facing with all the smart people out there on Wall Street trying to call for a correction is, I'm going to use a finance term, is the correction talk is really hitting the law of diminishing returns. It's been a Chicken Little call for about 6 months now. And we've seen a bit of a malaise, but the market's down less than 2% in the month of September. Traditionally, it's down 50 basis points on an average basis going back to the 1950s. And so we know that it's always weak in September. We get that. But I think what people are missing is we've entered in this period where, whether or not it's TINA or not, we've entered into this structural secular period where earnings are good, cash flow is good, operating performance is good, and interest rates are going to remain low. So over the last 10 years, the compound annual growth rate on of the S&P 500 is 15%. I'm here to tell you for the next 10 years it's going to be 15%. Now, that doesn't mean every year is going to be up 15%. We are going to slow down a little bit, Scott. But at the end of the day, this is a stock picker's market. This is an ebbs and flow market. That's why Farmer Jim is onto something with respect to the cyclicals. We wrote a note last night saying it's time to stay overweight materials and industrials, two of the worst performing sectors month to date. Again, this is an ebbs and flow market where we see these rolling corrections in growth versus value, cyclical versus stay at home. And I believe that we're at the bottom end of this correction / consolidation in materials and industrials. And that conclusion is led by fundamentals, things like operating performance and cash flow, things that a lot of investors have kind of forgotten about. And we think it's still time to buy materials and industrials.